Why did these famous bonds default? Investment history lessons. Have you ever wondered why some bonds, which seem like safe investments, end up defaulting? Understanding this can help you make smarter choices in your investment journey. Let's break it down. Bonds are essentially loans made by investors to issuers, like governments or corporations. The issuer promises to pay back the principal amount plus interest. However, sometimes they cannot meet these obligations, leading to defaults. Defaults can happen for various reasons. Poor financial management is one major factor. If an issuer mismanages their funds, they may struggle to make payments. Economic downturns can also play a role. When the economy suffers, revenue declines, making it hard for issuers to pay their debts. Political instability can disrupt repayment plans too, as can unexpected costs that arise during projects. Let's look at some famous defaults. Jefferson County in Alabama defaulted on its sewer revenue bonds. This happened because they faced costly court-mandated improvements while already carrying a heavy debt load. This case shows how infrastructure costs can overwhelm municipal finances. Another notable example is the Washington Public Power Supply System. They defaulted when the costs of building nuclear power plants skyrocketed and demand for power fell. This highlights the risks associated with large projects that may not have guaranteed returns. In the realm of sovereign bonds, Greece's default in 2012 is a key case. It occurred during a prolonged recession and was due to unsustainable debt levels. This illustrates how economic downturns can lead to government defaults. Argentina has defaulted multiple times, often due to economic crises and currency devaluations. This demonstrates how macroeconomic volatility can impact government debt. Mexico's default in 1990 was triggered by a sudden devaluation of the peso, making it harder to repay dollar-linked bonds. Corporate defaults are also significant. The Russian financial crisis in 1998 led to a default on bonds, which affected global markets. Long-term capital management, a hedge fund, collapsed partly due to exposure to Russian debt default, showing how interconnected these financial systems can be. China's first corporate bond default in 2014 involved Shanghai Kaori Solar Energy. This case revealed risks in corporate credit, even in markets that were previously stable. Common causes of defaults include economic recessions, which reduce revenue for both governments and corporations. Cost overruns and poor project planning can lead to insufficient funds for bond payments. Currency devaluations can increase debt burdens, especially when bonds are in foreign currencies. Political instability can disrupt repayment plans, while rising interest rates can increase borrowing costs. For adults planning investments, there are practical steps to take. Diversifying bond holdings across different issuers, sectors, and regions can help reduce default risk. Understanding the credit quality of bonds is essential, as lower-rated bonds typically carry higher risks. Always consider the issuer's financial health and the economic environment they operate in. Be cautious with bonds tied to complex projects or unstable economies. Monitoring currency exposure is also important when investing in foreign bonds. If direct bond investing seems complicated, consider bond funds or exchange-traded funds for professional management and risk mitigation. Learning from these famous bond defaults can help you assess risks more effectively. By diversifying your investments and choosing bonds that align with your financial goals, you can navigate the world of bonds with greater confidence.